please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, good afternoon and welcome to Midcap Radar. It's me, Sonia, again, and with me is Sumaira again. Sumaira, since we left last, I don't think much has happened or much has changed with the market. It seems like we're going to have to live with today being a very slow day. Of course, what the bank Nifty has done is come off from the day's high, so that's a bit of a concern.
Yeah, that's true actually, and you know, the European markets are trending fairly decent compared to what we're doing actually. So I don't know why we should have come off so significantly given that Europe opened in the green and has moved just a tad bit higher, and consequently around the same time our own market has come off. But nevertheless, as of now, it's all in the red. Here are our top stories. Market is firmly off the day's high. The Sensex and Nifty trade with a quarter with losses, and the Midcap index now underperforms. Nifty Bank is down about 50 points.
And Prime Minister Narendra Modi sells the India story at the third annual meeting of the Asian Infrastructure Investment Bank in Mumbai. Says India's macroeconomic fundamentals are strong and the fiscal situation is fully in control. Adds that India is a very low-risk political economy for foreign investors.
Cement and paint stocks gain. Goa GST Council member Marvin Godino tells CNBC TV18 that they will discuss lowering of the GST rate on these two sectors and other items in the upcoming meet.
And Infoed surges over 5% on news that it will invest around 300 crores in Policy Bazaar, while Aurobindo Pharma is in focus after it gets an approval for an anti-infection injection called ertapenem.
And all eyes are on New Delhi as 11 PSU banks under prompt corrective action meet with the Parliamentary Standing Committee. That meeting is underway. Well, those are our top stories. For now, let's track the technicals of trade. Sandeep Wagle of PowerMyWealth.com joins in. Sandeep, good afternoon to you. Well, what's really happening in the market? We've come off significantly. What's the call on the index first?
Afternoon, Sumaira. I think we are in that 100-point band of 10,700, 10,800, and any move towards 10,800, I think there is some selling. And I would term this as profit booking, and I don't read too much into this. I don't see 10,700 being broken. So any move towards that is an opportunity to buy again.
What about individual stocks, Sandeep? Anything interesting down your alley this afternoon?
I would go with a buy in a United Spirits, stop loss of 682, target of 708, and a sell in a Tata Steel, stop loss of 552, target 534.
Okay, well, you know, the stock that's really taking a knock, Sumaira, is Tata Motors. It's down another 5% today on the back of that 6% fall that we saw yesterday post that JLR investor day that took place. Any quick thoughts on Tata Motors? Does it beckon a fresh shorting opportunity now?
Actually, I was of the view that 280, 282 will be a very strong level and that should not break. But the way it has broken that, now I think 260, 265 is very likely to be tested. And maybe that one can look at those levels as kind of a bottom formation because we are in extreme oversold zones. So any short selling, I would advise caution.
Okay, in fact, it's both the Tata stocks in the index, Tata Steel, Tata Motors, both of them down 3.5 to 4.5 odd%. But Sandeep, thanks very much for your trading ideas this afternoon. Let's get in another market voice. Then we caught up with Ashok Wadhwa, the group CEO of Ambit, earlier this morning. And he was speaking to us from the sidelines of the Ambit India conference that's underway in London. He says Indian equities are likely to be impacted by a lot of these local and global political issues that are going on. And he remains positive on reforms like the GST.
Given that elections are now less than 12 months away in India, it's not an unusual situation. I think we have, I would say, a different and a bigger challenge this time, which is what's happening around the globe. I would say that Indian equities at this point of time are affected partly by the fact that we are getting into political space, being election 12 months from now, and partly for what's happening around the world. On the consumption side, investors continue to be bullish. And as I stated earlier, because of greater capacity utilization, people are starting to talk about additional capacity and therefore new private sector investment. We've also got some banks that are present here, both public sector banks as well as private sector banks. And I still see an element of tentativeness and nervousness in public sector institutions looking at financing private sector for infrastructure projects. The initial part of the pain has been addressed. Some new pain points will continue arising. But again, I'm positive and bullish that if the government continues to react in the positive manner that it has, addressing issues as they arise and not really waiting for a point of time, you will continue resolving more and more issues, and over a 2-year period, you should be able to achieve what we set out to achieve: a more simpler regime, simplicity in tax, avoid multiplicity, and hopefully all this leads to a significantly larger tax collection. And that's the important point. India's tax to GDP ratio must improve from the 12-13% to 17-18%. And I hope and pray that GST is able to contribute significantly to that process.
Okay, let's take a short break on that note. But on the other side of the break, Ratnamani Metals is the stock on our radar. They received a 125 crore rupee order for some welded carbon steel pipes. Prakash Sanghvi, the chairman and managing director of the company, will join in.
Hi, welcome back. You're watching Midcap Radar, and the Midcap that's on our radar now is Ratnamani Metals. They've won a small order, about 125 crore rupee order. But this stock has actually had an interesting journey. So, we'll be unable to pull up a 2-year chart for you, but the stock has rallied in the course of 2 years from 500 rupees all the way to about 1100 odd, which remains its 52-week high. And from the start of 2018, so from Jan actually is when we saw this stock falling a bit out of favor. So for the year, the stock is down about 14%, but over the last 2 years, it's been a highly rewarding company. Joining in now, we have Prakash Sanghvi, the CMD of the company, who joins in. Mr. Sanghvi, good afternoon. Thanks very much for joining in.
Good afternoon. Good afternoon.
Sir, to begin with, can you give us some more details about this order that you have won? I believe you have to complete it. You have a year's time to complete it. What are the kind of margins that you enjoy on these carbon steel pipe orders, etc.?
See, the margin in carbon steel, different segment to different segment. Water is something different. Oil and gas is something different. Project piping is something different. So this order we got in for a project piping for a greenfield petrochemical plant, and the margin is pretty good. Yeah.
Okay. So can you give us some numbers, Mr. Sanghvi? In general, how is demand looking for your steel pipes business? And based on the 25% growth that you saw in FY18, what do you think you could do for your top line in FY19?
Yeah, the growth year on year will be nearer to 15 to 18%. This year, you can say 18-19 might be 2,100 to 2,200 crores. And the margins remain all as a company level at an average, you can say 16 to 80% at EBITDA level.
Okay. So what's your order book currently, and could you break it up for us in terms of the sectors as well?
Yeah, the total order book position is about 1,690 crore. In that, about carbon steel is about 1,258 crore, and this stainless steel is about 432 crores. Out of that, there is a 427 crore is the export order, and rest is the domestic.
Okay, so how is the domestic demand looking? Is it better than what we've seen over the last 6 months? And where are you seeing, a major portion of the demand coming from?
See, the demand is picking up in a very much in oil and gas. Number of greenfield petrochemical plants, refineries are formed up, and the orders and inquiries are coming. And second, the fertilizer industry, 3 fertilizer plants are coming in the country, a greenfield. Then there is a little bit in power section also. So in all front, being Ratnamani become in Ratna stainless steel as well as in carbon steel, in all 4 category of welded pipe with coating facility. So something or other is coming with the company.
All right, Mr. Sanghvi, for now, we'll leave it at that, sir. Thanks very much for joining in. All the very best for FY19. Incidentally, this order that they've won is the single largest order for stainless steel pipes in the company's history. And the future, actually, FY19, looking fairly decent. A quick break. When we come back, it'll be time to hunt for value. So we'll tell you about Strides Shastan, whether it's a value pick or a value trap. Stay tuned.
Welcome back. It's an interesting day of trade, actually. There are two pockets in the broader markets which are doing pretty well. One of them is cement. Shree Cement is actually a top gainer, up almost about 6% Volumes are not too high. It's actually price action that you're seeing in cement. Ambuja Cement as well, looking pretty good. And the other space is FMCG. So Marico, Godrej Consumers, etc. Godrej Consumers hitting a new high today. All of these stocks, United Spirits, if you'd want to call it FMCG, all these stocks are up anywhere between 2 to 4% or so. But let's do one thing. Let's hunt for some value now. Today our focus is on the pharmaceutical sector. Ekta joins in. Ekta, which stock do you have for us?
Yes, Strides Shastan is the stock on my radar today. The stock has in fact seen a steep and for many a surprising correction in 2018 with a fall of over 50%. Now the reasons for the weakness, it seems, are wide. They range from a weak Q4 performance that the company reported with a loss of around 4 odd crores, whereas it was also because of the consistent margin weakness that we've seen in the past few quarters. So, for example, the FY19 margins or 18 margins stood at around 14% versus 19% in FY17. Now, in terms of the fundamentals, it is the institutional business also which was quite weak. So, for example, we saw the tenders fall by up to 50% in as per the management, and there is price pressures in the US market as well, which impacted the business. Now, the company has also made changes to its strategy. So, for example, they exited the India formulation presence entirely by selling their business to Eris Life Sciences for around 500 crores last year. There are also concerns of the company constantly undertaking some kind of restructuring, which is resulting in the perception of the company losing focus on its core business. Now, some of the key factors, however, to watch out for will be obviously the recovery in the US market. The company has guided for around $120 million in terms of sales in FY19. They recently got approval for Tamiflu generic as well, plus recovery in the institutional business. The company, for example, also received approval for an anti-malarial drug just a couple of days ago. Positive inspections from the US FDA would also continue to be a trigger, considering that they've had a good regulatory track record, plus growing presence in other developed markets such as Australia. Also, Arun Kumar, the promoter, is now playing an active role in the business as well. Remember that he had taken a step back just a couple of months ago. Now, in terms of brokerages, they were very negative after the Q4 numbers. So, for example, Macquarie, which has always been a long-term bull in Strides Shastan, downgraded the stock to neutral and cut the target price to around 398. Motilal continues to have a buy rating, but they also lowered their target price to 481. In terms of valuations, the company, after adjusting for the earnings downgrade, is trading at around 14 to 15 times FY20 price to earnings, which is 1 year forward. So, at this point in time, maybe a little bit of a discount. But before I wrap up, here's a quick disclaimer. This is not a stock recommendation. These are just the pros and cons and the key issues that Strides is facing.
All right, Ekta, thanks very much for that. So, Strides Shastan, value pick or value trap, you decide. All right, here's a CNBC TV18 exclusive. Sources tell us that the Tata Group is exploring options to divest up to 9% stake in Voltas. Kritika Saxena is here with the details. Kritika.
Well, over the last 12 months, Tata Group has been doing two specific things. One is to reduce cross-holding and simplify the holding structure across group companies. And two is to increase cash flow from a group company level and from a group and an operating level. So what we understand is that there are many micro things that the group is looking at doing, and one of them is identifying individual group companies. So at this point in time, we understand that Tata Group may look at divesting some portion of its stake in Voltas, entirely in line with their plans to reduce cross-holding structure. So all in all, we understand from sources that from the 26.6% that Tata Sons has in its holding, Tata Group may sell about 4 to 5%. They also have about 0.58% stake of Evat Investment, which is one of the investment arms. They may exit that completely. Now, Tata Investment Corporation has about 3.01%. There's a very tiny portion of Tata Power stake, that is about 0.07%. But all of it together is going to come up to almost 8.5% odd stake, and that entire stake is likely to be sold off. Now, they're looking at various routes. So they haven't finalized the routes yet, but I understand that an OFS is one of the options that they may consider, and that could also happen in parts. It may not happen in one go. It's still in the works. We may see a couple of quarters for this to actually go through. But yes, this is in line with their plan to increase cash flow as well, not just reduce the cross-holding. And we understand from our sources that they may look at investing the amount that they get from Voltas into the defense and aerospace business, where according to our sources they are planning a significant investment. When we did contact Tata Group, they said that they did not want to comment on market speculation.
Okay, thanks a lot for that, Kritika. Voltas has been in focus all day today. But moving on, Info Edge has been buzzing on the back of the company investing some money, $45 million in Policy Bazaar. Mangalam, tell us more.
Absolutely. So they've put in about 300 crore rupees or $45 million in the company that runs and operates PolicyBazaar.com. They've done this jointly with SoftBank. So $90 million is what they've paid for about 8.9% stake in eTech Aces, the company that runs Policy Bazaar. $45 million is being put by Info Edge. Remember, earlier Info Edge had about 10% stake in Policy Bazaar, so now they've gone up and added about 4.5% more. Morgan Stanley on the back of this is overweight on the stock with a target of 1900 rupees. They believe that this announcement is significant for two reasons. It one proves that the company can go ahead and put in 20% of its cash on the horse that it is backing the appetite for larger deals, and secondly, they can also go ahead to defend as well as increase their share in existing investee companies. We spoke with the management. They were also pretty positive about the outlook of future business going forward and their eye for startups. They have around 1800 crores in their balance sheet, and they're looking for about 15 more startups going ahead as future investments. In fact, let's hear out the management of Info Edge itself.
Our initial stake was, obviously, we put some 16 crore to get some good amount of stake over there. But over a period of time, it has been kind of diluted, and we have been getting new and newer partners on board. And we have all marquee investors now in this company. And company is on a very strong, growth trajectory. So after this round, the valuation in this private market is, about $1 billion plus kind of a valuation. Their consolidated turnover is about more than 300 crore, and obviously this is the insurance commission that we are talking about. We are sitting on large amount of cash. Cash has been central to our strategy. And we would be happy if there are more such opportunities available to us for more investment. We already have about 15 investments which are live with us. Of course, 2 or 3 are most talked about. The others are at a very early stage. But we would be happy to do the follow-on round in these investments, the one which we have already done. And plus, we are always looking for new startups. We have cash on our balance sheet. On our balance sheet is something like about $275 million, about 1,800 crores.
All right, that's Info Edge, one of the news stories of the day. But for now, the good news is that the market is picking up pace once again. So the key indices are back in the green, and the Midcap index too has cut its losses. In fact, the Nifty bank could be moving into the green as we speak. So as we wind down then on Midcap Radar, we leave you with some market opinion from Pramod Gubbi of Ambit, who says that there could be a further correction in the broader market. Thanks for watching.
Global factors in the form of continued tightening of liquidity by the Fed as the QE sort of rolls off, hitting almost a $50 billion run rate by October, and the ECB in its latest meeting has also hinted at sort of the end of QE there. So with global liquidity tightening, U.S. Treasury yields close to 3%. There is clearly a risk to emerging market assets, as we've seen in terms of outflows, that those outflows can continue, causing further weakness. Nifty or the Sensex level, the fall hasn't been that clear. But at the underlying mid-cap level, several individual stocks have been knocked more than 30–40%. So that is not clearly visible. So I think it's not just simply about the index, but at the broader market level, you could see further correction. Consumption should certainly be of interest, given this sort of spending by the government on the development program, as well as general election-related spending. We'll have hopefully a normal monsoon, which should also mean rural is coming back after a tough 2–3 years. Wage growth also seems to be picking up, so consumption should definitely be one of the interesting themes. Also private sector financials, I think the sort of space that public sector banks have given away, given the lack of capitalization. Private sector banks continue to gain market share. On top of that, in a rising rate regime, some of these banks with very strong CASA can expect increasing spreads and margins, which should drive earnings growth disproportionately larger than the top line growth. So it's a double double catalyst for private sector financials in general.